Oops, can people hear me now? All right. We'll try to keep this short and sweet tonight, only because it's still a chopped up week with Wednesday closed. All right. Hope everybody had a good Christmas. Have Sandy's grandkids here and from Corpus Christi, Texas, and they're just loving sledding down the hillside here in the snow. Okay. Okay, good. All right, as we can see, once we had this big move back up through the resistance level, we're still just in this 45 degree on the Dow. The S&P, same scenario, little backing and filling today. But let's see if I can get some of these things off the screen here. Nothing, today was not anything that we would write home about as far as being a oh, well, for crying out loud, that's just great. How could I forget the, there we go. Having a little mental vacation here. All right, let's see. See if we do this. Sound back on. How's that? All right, and the Nasdaq. Observe the obvious. The obvious is as long as it, as long as this has stayed up above the T line, we're still in an uptrend. Sound goes in and out. All right, I don't know why that would be. All right. Crude oil is just kind of backed out of the picture here. It's not really any major concern anymore. Kind of whipped down today. It's been in an uptrend back up toward 100. Now we'll have to see if they take it back down below the T line and get it back down to that trend channel. Gold has just been drifting. Nothing to show there's any real major buying pressure anymore. Same scenario with silver. Notice the abandoned baby up here. Took it down hard. Took it back up. Took it back down hard. Now we're back below the T line. If this opens lower, just kind of continuing the downtrend. Interest rates have been dropping, or the bond prices have been dropping. Interest rates going up a little bit. But now in the oversold area, we have to see what it does once it gets here to the T line. But not anything significant as far as any major change in interest rates, but showing us that there is some interest rate rising going on. So what we have to be careful with in this market is, with it going up so strong, the day after New Year's, got to watch for them pulling the plug, just because everybody wants to book their profits into next year. So they're not going to do it tomorrow, but on Thursday, you might start seeing some profit taking. Okay, what else we got? Nothing going on in the grains that would be anything exuberant. You can see how soybeans is slowly rolling over. Wheat has been in a steady decline. This one's a very classic chart. Wave 1, wave 2, wave 3. Starting to look for a bottom down here. And hogs. Notice what it did today. It gapped up, but immediately started selling off, telling us they weren't going to come up through the T-line. They're still heading down. Now they've broken this support level. Still might be some more downside, or should be a lot more downside in the in hogs. Got a potential doji sandwich, though, setting up in live cattle. Big up day, doji, right here at the resistance level and starting trading it higher. So what that essentially tells us is this area is broken out. Now this area may be breaking out because of the results or the assumptions we can make with a doji sandwich, that if they take this higher and break out, that means there's still going to be some more follow through. Okay, gold, dollar. Dollar's still drifting. I'd still be short the dollar right now. Let's see, the British pound, still in an uptrend. And the euro, this one, notice how it came back and did a J-hook pattern. If this breaks out through this level, the euro is going to be picking up some more strength. And the Japanese yen, just getting slaughtered. Stay short on the Japanese yen. Okay. All right. Usually between Christmas and New Year's, it gets very lethargic as far as the markets. However, as we can see, we've had a gangbuster going on, which has allowed us to make some good profits with the charts that are working. We recommended ICLD the other day because we had this essentially a J-hook type pattern setting up. Why was this a good call? Because somebody was extremely enthusiastic that took this stock from 2 to 17 in a matter of 3 days. Consolidation, whatever enthusiasm was over here in wave 1 is probably going to be right back in wave 3, which means if this was a 15-point move, 15-point move from here could take you up into the $27 range. On the other side, when that enthusiasm does come into a stock, you just have to be extremely careful that the further away you move from the T-line, and as a matter of fact, what I'm going to do is I'm going to modify, that should be the 3. I don't know how I'll get that. And I want to make the display a little bit heavier. 0.01. I got a 0.6. Apply. Okay. And I can see it a little bit better. The further away you move from the T-line and the further away you move from the 3 T-line, the higher the probability you're going to come back down. So the other day we took some profits on this one because essentially it's gone from 10. We got out at 28. And today we closed out the position. Not that it's not going to go further, because if you look at this long-term chart, we can't look at that long-term chart. We look at the where it was just a few years back, trading up in the $300 to $500 range. Now we've had a big basing period, and it's now breaking out. Where's it going to break out to? Well, even if it broke out on the monthly chart back up to the 50, there's still a lot of upside potential to this. But we can't factor that right now. First of all, our daily target is probably the 200. Now, this is the weekly. And so this is telling us there's a good possibility they're going to bring it back to the T-line. We're moving from $31 back down to $21. That's a good hefty move. So we're taking profits, but we'll watch diligently when we hit the T line, because this is telling us this is parabolic, and usually what happens in a parabolic, just like we saw over here, parabolic pulls back, they do profit taking, and then they start right back up again. This is CTR or CYRT, recommend buying this one on Positive Trading Today. Okay, and then some of the other ones that we're still holding. MI or HIMX. There's your fry pan bottom. There's your breakout. What do we look for right as we get to this level? To see whether they failed or whether they're breaking out. If they break out, that tells us they're confirming our fry pan bottom. This is what we should expect. Now, a lot of people ask, the newbies ask, well, shoot, should we be buying something that's already in the overbought area? That's why you want to learn what your fry pan bottom and your other patterns are telling you. They are usually going to break out when you're up in the overbought area. So this gets you away from the fear factor of buying something that's overbought. What's our normal inclination? Is when we see a gap up in the overbought condition, start looking for a sell signal. However, if it's coming out of a pattern that we can recognize, that's usually an indication that this investor sentiment that was building up is going to create a very strong price move after that. Define CQG, please. That's the charting software. Yeah. For this charting, or this I've been using CQG because that's usually the feed for a lot of the chart softwares out there, because they were one of the first ones and they're kind of the granddaddy. All right, we also recommended JKS for one simple reason. We started seeing buy signals, and we could see that every time they pulled back to the 50, we were seeing buy signals. And when we saw buy signals, where did they take it to? They took it back up to the top of the trend channel. So there's a good possibility, let's make this big enough where we can all see it, that the bullish Harami, inverted hammer, at the 50, doji, gap up from the doji, kind of a doji sandwich, told us we're probably going higher, with the assumption that if we're going higher, now the next target that everybody's going to be watching is up somewhere in this range. So this is why we put out kind of a recommendation to buy, I think it was the 30s, selling the 35s, because at least it's going to come to this area and turn your $1.70 into $5. Dave T, hold on to your individual ones until we get to the end. When I tell Jim to do this double line, then you can put them in, and I want to limit them to 2 tonight. So JSK was working well. TSL, another one of the solars, has that nice little J-hook pattern, kind of a inverted head and shoulders. This one could pop back up to test this area. Okay, and CSUN was another one of the solars that broke out today. This one is going to be, I'm only bringing this up because I was going to look at this one further down the list. But this one you can be buying, especially if you're buying, your first target obviously is the 50. If it gets through there, you've definitely broken through this downward trend channel. Should be more upside. And SRPT, this is why we kind of watch pattern setups. Let's make this a little bit more. Got this slow curve. Where's our next move? There could be a good pop up here to the 50. If they pop it up to the 50, that means we're in the gap area, which means there's no resistance until we get up to the 200. So this could move from 20 to 35 relatively quick. And That's the whole point of trying to analyze where our upside targets are. Right now, this is a slow uptrend. If we see it break out, that's a new factor into the slow uptrend, and we can see what our resistance levels are and what our targets are. There's going to be a lot of charts out there that look attractive, but if your upside potential is only 8% versus one that's 75%, you want to go with the 75%, obviously. So a lot of people say, well, shoot, I'm afraid of the volatility. You want the volatility as long as you know your patterns are working correctly. You want to take advantage of that volatility. Oh, there was CSUN on the breakout. Same scenario on a breakout as we saw in Kendai. There's that big fry pan bottom, cup and handle breakout. So we're up in the overbought area. When they broken out through this fry pan bottom, does that tell us we're at the top? Well, if you know what the results of a fry pan bottom are, that pretty much tells us, no, we're just got the potential of starting. So buying this right in here the other day, and again, we use this as an illustration, or did we use this as an illustration? We couldn't have. We haven't been here. This is where you go to your 10-minute chart. That's not the 10-minute chart. There's a 10-minute chart. All right, so we're at this level. Let me make this bigger for a few minutes. And it's broken out into the next range. Now, it might not be there. Hold on, I've got to take a look to see which. Yeah, I'm guessing it was over here. Not this one, but this one right here, where we've already started having the up move. Now look what we're having. We're having kind of a doji sandwich. I'm sorry, and I think it was even right in here. No, it's not even there. You know, somewhere in here. Notice when the price was already up pretty good, and you have to decide, is it time to start buying? Let me see if I can do this elegantly. Stock price is up here. What's everybody afraid of? Afraid of buying into strength because, man, I buy right here and they turn it right around against me. All right, to eliminate that fear, you see it's breaking out. Then you just come back to your 10-minute chart and say, all right, my 10-minute chart is looking like this. Does this tell me this is a pattern that I should be buying, or have they topped it out? Well, as we can see, they were still buying, and I now have found where it was. It was right here. It did pull back, came back up. So buying right here, because as we're looking at it, we're saying, all right, they're still taking this up. They're not bringing it back below the T-line. If I'm buying right here, I've got a doji sandwich set up. Well, they did pull it back, and that's, again, one of the fear factors that we have is we're buying here, and they immediately pull back. Except with the 10-minute chart, we've got the little added comfort that if they can't close this back below the T-line, all right, so we bought here and it's back here. Is that bad? Not yet, because on the 10-minute chart, it still tells us we're not below the T-line. A little bit antsy here, but by this time, you've got to remember what our chart is starting to look like. Our chart is starting to look like it's trading up here, and it's not really backing off. So that tells me they haven't taken it up and bringing it right back down. That my 10-minute chart is telling me there's still buying going on. Might be soggy, but there's no selling, and we just have to assume that if it's not selling off and our stochastics are pulling back, that this isn't a hard sell-off that I'm still comfortable with this, and that's kind of the same scenario. Now, what happened to Kendai today on the 10-minute chart? Well, on the daily, we had kind of a doji. On the 10-minute chart, where's it probably moving to? Right back here to the 50, and then see if it pops back up off of there. Let's see. What told you to hold over the weekend and not take some profits? Because there was nothing to tell us that there was any selling going on. This whole chart, once we bought, it never really closed back below the T line. Now, just slightly here, but were they decisive sells? Not really. Stochastics heading down. They're still trading flat indecisively right here. And then by the end of the day, they're still closing up here. This is a breakout of a fry pan bottom. So what is my expectations of a fry pan bottom breakout? More upside. So I wouldn't be selling here unless I saw something severe in my chart. Now, I've just done a video on how to use the 3T, the T-line, the 5-minute, and the 10-minute combination to tell you when to stay in a trade or when to get out of a trade or when to get into a trade at the appropriate time. So there's going to be a lot of times when you see something like this and your question is, man, do I want to buy a stock that's already up 30% today? Well, if you know what the pattern is telling you, yes, the probabilities are that much stronger. However, if this had opened lower on today and started trading down, what can you assume? We can pretty much assume visually that they're taking profits. Bill, it's still going to be probably another 7 days before we get it all spruced up and ready to go for everybody. And then we'll probably be doing some sessions here for members, kind of reiterating that. So anyways, there's different strategies. If this had opened here and started trading down, what's the worst case scenario? You start taking profits, and then you put your buy stop right here, because if they took it down and then came back up through this level, you want to be back in, because that tells us the profit taking is over and the bulls are still there on this breakout. So what's that do for you? All right, so you gave up 30, 40 cents of potential profit, but I'd rather give up 30, 40% of potential profit than hang on to it and actually give back bigger profit. Isn't a gap up doji like Kendai a sell signal, or isn't the stochastics in the overbought area? You got to still remember what this tells us. Tells us we got a fry pan bottom breakout. The gap up doji. We're not in the overbought area. I mean, we're just climbing up into the overbought area. This still implies to me that this is a breakout, and it broke out through this level right here, that there's a new dynamic in this stock. So as of right now, you continue to hold this. Now, where do you not want to see this trade tomorrow? Well, if this was the low of today and the bull stepped back in, I don't want to see it open lower and trade back below this level, because that tells us whatever bullish sentiment was bringing it back up from that point is not there. They could be bringing it down to where? Maybe the 3T, maybe back to the T line. But I don't want to give up 30% of a trade to see if it's going to come back down and support. I visited headquarters SPSTI. Okay. If a price stays above the T line on the 10-minute, all is good. But if it fails the 10-minute and takes profits, then buy back if it moves up again. Yes. Now, where are you going to be more apt to take profits on the 10-minute chart? On something like this, where I can see that we've gone parabolic and we're away from the T line, and now we're away from the 3T line. All right, now I'll flip over to my 10-minute chart, because I know I'm up in a huge risk overbought condition. If I go to my 10-minute chart, see, I took profits right here when it came back down through the T line, after popping up big. Now, if I was more aggressive, I would have bought it back, but I sold half the position because where was my half position now? Way up in this area. And if we bought down here, we'd already made 140% profit off of this. So the other half is up here. Now I go back to my 10-minute chart again. Say, all right, they closed up here with a doji. Where do I want to take profits? Probably if it came back down through here. If I didn't get out, I wanted to make sure if it could climb back up. But as I could see, it wasn't. We're even right here. Where do you think the potential 10-minute chart could go to? Probably down here. So I want to close out, take some profits up here. If it does come back down here or through here, back down to the T-line, I'm going to definitely be going back to the 10-minute chart and saying, all right, are they supporting on the T-line and starting back up again? Or are they opening up here tomorrow and starting back up? If they do, that tells me the bulls are back in. I can always buy back in again. Again, the alert was I was already a good distance away from the T-line. I was way away from the T-line. And not only was I way away from the T-line, I was away from the 3T line. I didn't want to be holding it if it came back down through the 3T and or the open of the previous day. Okay. I've got way off track there. Anyways, we're going to have that video already here, and we're probably going to walk through that same scenario here a couple times in the not too distant future. All right, we can do, let's see, for some reason this isn't coming up. CTR, same scenario. Where do I expect this to be moving from this point? 10-minute chart. I definitely want to see it bounce up tomorrow, which means we want to see a positive open. If it starts trading positive, where do I not want to see the 10-minute chart move? Back down through the 50. If it fails the 50 on the 10-minute chart, that's probably telling me they're coming back to a lower level. Where's a possible lower level? They still have a little gap right here on the 10-minute chart they can be coming to. Now, why would I come back out? Because we're already in a this would be telling us there's selling going on. What do I expect from this type of chart pattern? I expect they should be opening positive and going positive from this direction. And the further they move up, again, the question is, well, is this too far away from the T-line? Probably tomorrow, if it opens up here, your T-line is going to be up here, and your 3T is going to be up here. So it's not what you're looking at today. Based upon the pattern, needs confirmation. And if it starts confirming this direction, these moving averages, the T-line and the 3T, are probably going to come back up closer. Now, notice what happened over here. We moved a huge direction away from the T-line as well as the 3T. They opened up here and started up here. I don't know whether I can get these or not. Let's see. I'm guessing this was the day, and then the next day they started trading it, trading back down. So anytime I start seeing them start trading back down, you know exactly what's going on, that there's profit taking going on. The worst case scenario would have been if this opened here and traded up here, I better have my stop at where it opened, because if it came back down through there, that means they're selling below where they opened it, and the bears have taken control. Sounds like I'm talking away from the mic. All right. Would you only watch the 10-minute chart? No. If I see things starting to weaken, Let me see if I can figure out one that started seeing things weaken. That one's not the right one to use for an illustration. Let's go back to CYTR. If I start seeing things weaken up here and start turning around and it's still above the T line, or the T line on the 10-minute chart, then I'll flip down to the 5-minute chart to give me a little bit faster indication of what's going on. If I can see on the 5-minute chart that they're starting to sell it off, where is it likely to move to? Back to the T line. Then I can kind of extrapolate that the 10-minute chart may be still heading down. So that's kind of a little bit stretched out, but do you place significant on the pre-market candles for action? No. The pre-market, you got to remember, the people that are buying and moving the stock price around are the big boys. Because the price moves around on a couple thousand shares after it traded 2 million shares that day, doesn't tell me anything. On CTR, will you sell off at half off on? Oh boy, let's see. Probably if this trade was based upon this moving in this direction, right now, I wouldn't want to see it trade back below this low right here. Because that would tell me there's too much bearish pressure. They're probably bringing it back down, which would also tell me that they've taken it up, pulled it back. If this is a J-hook pattern, they should be breaching this area and going positive. Check mic position again. All right. How's that? All right. This should be, I mean, we're analyzing a chart pattern based upon what it should be doing. This is a J-hook pattern. It should be going this way. It shouldn't be going this way. So if this opened up positive tomorrow and came back through this level, I'd close out the position because that's not the direction it should have been going. It should have been in this direction. Yes, I would buy CYTP now on the same assumption that if I'm buying on positive trading tomorrow, I don't want to see it come back through this level. Why am I buying? Because I've got a J-hook potential, but if this is wave 1 and this is wave 3, I've got a lot more upsides. All right. Well, Mike, hold on. Let me move this mic around. Let's see. Okay. All right. We're way behind schedule. You guys aren't going to get to bed tonight. NTWK. What's happening here? Oh, what time is it? It's the same time every night, 8:39. Okay. Okay, this is not what I like to see. KRO. Oh man, I hate when this happens. All right, I'm gonna just goof around with this. That might not be. All right. All right, NTWK did a nice little stutter step, but it broke out through this level. If you can draw a little line even down through here, and it did bullish, that slow curve bullish, and then it breaks out through there, tells you the whole new dynamic in this stock. If they break through the 50, Tells you that resistance level is gone. If they break through here, they're in the gap area. This one could move up to this level. Why do I say could move up to this level? Because this candle today told us there was a lot more buying force coming in after it had reversed down here. There was our morning star signal. There's our little stutter step. There's our J hook. They're still taking this higher. Let's see. That was KRO. We were working on KRO. Another one that right at this area, where did this set up? This one's a little bit. Right here, we had a doji in the overbought condition, right at a resistance level. So what's our simple rule of a doji? It's going to move in the direction how they open it after a doji. So if they open this positive, telling us they're moving higher, that told us the resistance level wasn't there anymore. That's where everybody starts piling in because they can also see that resistance level isn't working anymore. Same scenario here with the NQ. Slow curve, went through the 50, kind of a scoop type pattern. And notice a little wedge here. Got a wedge formation, pulls back, now curving up. This is where you get your slingshot effect coming out the other side. In XON, let me see if anything's come up over here yet. Okay. Thank goodness gracious Agnes. All right. Well, shuzzbutts. Okay. XON also gapped up. You can draw that resistance line right down through here. It gapped up through there. That tells me there's a new force coming in on that one. Last one was KRO. And ONVO also has a good-looking chart. Notice where it started bottoming. Morning star signal, smack dab on the 50. Bullish engulfing, smack dab on the 50. Doji sandwich. What's a doji sandwich tell us? There's going to be more upside. If there's more upside, this area is not going to act as resistance. We're heading back up to where we can get probably about a 35-40% gain back up to recent highs. In BIDA, same scenario here. When they bottom right on the 50, that tells you exactly what we want to see, especially with the graphics of what's going on in investor sentiment. They're buying once it gets back to a support level that everybody can see is either going to act as a support or it's going to go through. We can see immediately what the investor sentiment is doing at that level. Now we're back up above the T-line. Today it backed off a little bit, consolidated back to the T-line. Makes this very simple. If they open this positive tomorrow, you want to be a buyer because they're going to be coming back up not only possibly to this level, but if you drew a line right up through the tops, remember what happens when you get a pause in the trend? Usually there's a fast move back up to the trend, and then it goes 45 degrees off of there. Okay, what else we got? AM, no, need that, don't do that. AMRS. Oh, just showing this because there's that move, there's that support right here on the 50 with a big bullish signal. There's your parabolic. And again, not every trade you're going to find is going to move like this, obviously. But the more elements we can put into place, such as a bullish engulfing signal close above the T-line, a doji right at the resistance level, a doji sandwich breaking out through the resistance level, and more doji sandwiches, that basically tells us, that's all added up to tell us this is moving in the right direction. Will all of them double in a matter of a couple weeks? Definitely not, but at least you're putting yourself in a position where you can be in those type of trades. We had no idea what the returns was going to be on this one coming out of this chart pattern. Hopefully, maybe a slow move up like this, still a potentially good move. But it started going parabolic, and we made huge profits before the end of the year. Will there be much buying on December 31st, or will the brokers be closing the year-end positions? I don't think they will close them this year because they don't want to take their profits in this year. What you have to watch out for is on the 2nd, seeing if everybody starts taking their profits going into the next year. Let's see. For some reason, I had BONA. Oh, the bigger the signal, the higher the probability you're going to see a strong move. So here's kind of our little stutter step. I took it up to the 50, pulled it back. Now you have a bullish engulfing. That tells me there's still going to be a lot more upside to this one, just based on the stutter step failing and then that resistance level not failing anymore. MODN. All you can do here, let's see, I had something to illustrate here. I think it was just the fact that every time it came back to the T-line, you had another buy signal. So that's why the T-line is a very important. The stutter step is just where they take it up. I forget which one we were looking at on the stutter. It's when you have a buy signal, then they pull it back a little bit, and then another buy signal that told you that pullback was just the initial profit taking. VIPs, that's kind of a stutter step right there. You have a bullish engulfing signal to take it up. Notice on the pullback, knowing what the characteristics are of the signals, these are just indecisive trading. That would be a stutter step. If they open this positive and take it back up, you had a strong move. That stutter step, new buying, takes you up again. Yes, tonight will be recorded, as always. ZHNE, that's a stutter step. That's coming up right to a resistance level. Notice the pullback. Pullback was very indecisive. And notice what they really couldn't do. They couldn't close it below the T-line. That's when you start buying, knowing that they came up profit taking. Now you're in the next leg up. Now this whole pattern has a potential breaking out. And where could this pattern break out to? There's your uptrending channel. There's your potential next target up here. So that, again, was kind of the same scenario of why we were buying JKS. Because you had your trend channel, you had your support, you had your stutter step. Now you have a Doji. Where's your upside potential? At least to this level. And then more probable back up to the top of the trend channel. Okay, where else we got? Let's see. Anytime I see a pattern, I always put that high up on the list. There's kind of a scoop pattern coming into Cooper Tire. And notice where it closed today, just above the 50. So what's our result of a kind of a scoop pattern? Usually a slingshot effect. So more than likely you could get a good quick move up to the 200, which is also get up here corresponding with filling this gap. CAMP, there's a big fry pan bottom. There's a pullback right to the 50 and taking it back up. Another doji sandwich back up above the T-line. I think this is wave 1. Wave 2, you're going into wave 3, which means you've got another 10, 12 points to the upside. What are the probabilities of a stutter step? What did I just do? CAMP and GCA. There, observe the obvious. Wave 1, wave 2, wave 3 should take you up into the $11.50, $12 area. And Gale. Gale's another one that's been pointed out on the chat room. This one I definitely would not be afraid to be buying on positive trading tomorrow. It's up 12% today. Should you be buying a stock that's already up 12%? It is. If it's breaking out through, you should. If it's breaking out through this level, this is telling us that they're still taking this higher. Wave 1, wave 2, wave 3 taking us up into about the 720 range. ZLTQ, slow curve. Just watch these. These slow curves are what usually give you a nice slingshot effect and make some very quick profits. All right, I'm going to take a chance here and see whether we've got anything going on over here, which doesn't matter because I'm just about ready out of symbols. Let's see, that was AMKR. That was how it pulled back indecisively. Then they told you what decision they were making. Okay. Does the bullish engulfing have to open below the close of the previous day, or can it open at the same price and still be a valid symbol? It can open at the same price, just as long as one of your opens and closes are even, you're all right. But if both the opens and closes are even, that's a different signal. That's usually the covering of short positions. You shouldn't, even though it looks bullish, you have to be a little bit more cautious that might just be a short covering, and watch to see if it doesn't open lower the next day and head right back down. So a true bullish engulfing has to have at least one of the opens or closes can be even, but the other one has to be exceeding the previous open or close. Okay. Let me see if I've got anything else of any great consequence here. No, it's just in a market like this where you don't have any investor sentiment, I hope you are observing the obvious, which is that there are some big profits that we've made here in the last couple of weeks on some of these price patterns. And the reason they're breaking out and working is because there's no change. The market isn't showing any negative signs that the investor sentiment is still building up and producing an opportunity for some of these price patterns to break out without the fear of a major change of investor sentiment in the market overall. So, all right. So with that, are there any questions, general questions on candlesticks? Now, I recommended not only JSK this morning, but also recommended that if it started trading positive, to put on a spread, because we kind of knew where our upside potential was, and the probabilities of it going there after bouncing off the bottom of the trend channel was extremely good. So this is where, again, you just kind of observe the obvious, that if you have buy signals off of a major support level, your stochastics are moving in the right direction, and your trend channel is still in progress, you can pretty well calculate where your upside is, and it makes a very low risk trade. ARCW. Whoops. ARCW. Yes, we made some good money on this trade, and right now I don't show it as closing below the T line. So this one will get one more day, because notice it does come back to the T line. But it needs to open positive and trade positive to stay in it. Should you generally sell at the T line? No, you should generally use the T line as your trend indicator. You should sell if you see a breach of the T line. For example, this was a good cradle pattern, which our expectations were that it should be moving this direction. The next day they do a bearish Harami. Remember, the current signal is the strongest indicator, and it closed just slightly below the T line, except we still had this pattern. What we needed to see, we knew what our game plan would be the next day. It needed to open higher and trade higher to stay in it. If it opened lower, it was telling us we had a bearish signal and a close back below the T line, close out the position. Now, there will be many times where I'll buy a position and close it out and then rebuy the position. Because, remember, the buying was going on here for some reason. every single buy signal is not going to tell you you're going to have a big price move, but it's telling you a message that there are buyers down here. So if it doesn't work the first time, wait for the second time. Okay. Just before the market, look at the futures. The futures don't mean a hill of beans until about 5 minutes before the market open, because that's where everybody with the big money that knows that they can only get in when the volume's there are making their decisions. So there's a lot of times when people will say, even in the chat room tonight, oh, the pre-market or the futures are down 40 points on the Dow. That doesn't mean anything to me. It's 5 minutes before the market opens that I get an indication of what investor sentiment's going to do on the open. I do consider the sectors in the sense that if I see a couple strong stocks or a numerous number of stocks like JKS, are the other ones acting well also? Well, if I can see that CSUN's acting well, I can already make an assumption that that there might be some buying going on in the, what was the other one that, Shaw, CSUN, that didn't do any good. But I can pretty much assume this sector is acting strong. So if I can see 4, 5, 6 stocks all showing good charts, and I realize they're all in the same sector, then I realize I've got a fairly good trade in that, because that sector is acting strong. On the other hand, if I can't find a bunch of stocks moving in one direction, then I just go back to my sector scan, which is just as good as a stock scan or the market index scans, and see which sectors were acting the strongest and try to find the stocks in there that were acting, or the sectors that were acting the strongest, and try to find the stocks that were acting well. Still like Scotty, because it pulled right back. There's your Morningstar signal. There's your buy signals. You're still above the T line, and you've broken through this downward trend channel. Just stay with it. Okay. All right, Jim, go ahead and do the double line. And in 2.8 seconds, do another double line. I'll try to get most of these. Still got grandkids upstairs that I've got to teach how to play the match game, and RPRX. This one, as you can see, came up to the resistance level. As you can see, let's make it big enough where we can see. Came up to the resistance level right here at the 200, pulled back, but it hasn't closed below the T line. This is very simple. If it opens lower tomorrow, close out the position. That tells you the T line's not holding, but now they're probably bringing it back to the 50. If it opens positive and trades positive, you can even be buying if it closes back up above the 200. Eagle pulled back, same scenario. It's right back here, right around the moving averages. Kind of did a little indecisive day. This one you definitely want to see open positive and trade positive to stay in it. If it opens lower, you can close out the position and then just see what it does at the T line. If it supports at the T line and starts coming back up, you get ready to buy it back if it comes back up through the 200. ENDP, stay long as long as you don't see a sell signal. Twitter, this was this is the reason why we want to know what our signals tell us. Look how far away you were from the T line. Look how far away you were from the 3T line. You have been gapping up. Here's wave 1. Wave 3, approximately the same distance. Now you have a doji. Made it very simple. If they opened it lower, you closed out the position immediately. Because where was it going to come back to? Probably back to the T line. Was it going to support there? We don't know until the next day to find out. So let's see. Cocoa gap down. This one you can be going short on weakness tomorrow. And natural gas is still in a slow, or not slow uptrend, but an uptrend. It's getting toppy, but after a day of closing below the T line, they gapped it back up and they're above the T line. If you're long, you stay long, but if this opened lower and started trading down again, that told us the T line wasn't going to act as support the second time. CDE, this one I wouldn't be long or short. As you can see, you're sideways, and you haven't, it kind of negated the signal today. You had the doji sandwich, which meant it needed to open positive and trade positive. Got a bearish harami, which means you're probably still looking at this slow downward trend channel as your predominant indicator. AMT, this one you can buy on positive trading. Again, breaking through this downward trend channel, supporting at the 50. If I was buying tomorrow, I wouldn't want to see it close. I wouldn't want to see it trade back below the open, because if it did, you're right back into that downward trend channel again. DDD just kind of flip-flops around, but it stayed long on this one. This is still wave 1. Tells me wave 3 still has another. You're right here at 91. I would suspect it's going to hit 100 pretty soon. That's a technical term, pretty soon, probably within the next week or 10 days. SPWR, another one that you could be buying. I'd rather buy this knowing that it broke through the 50. And CZR. This one you want to be buying. The slow fry pan bottom breaking out through this level. This one you want to buy. Use the halfway point of this candle as your stop. And Netflix. If this one opens weaker tomorrow, this was always the problem with the Netflix. It was just so slow that as soon as they started giving up on it and breaking the T line, they're probably coming back down toward the 50 at this point. And GST. Stay long, but if this opened weaker tomorrow, after shooting stars, doji, remember, it's going to move in the direction of how they open this. If it opened lower tomorrow, I would probably close out the position and just watch to see what it does once it gets back down to the T line. Let's see, potash. Potash, if this opens weaker tomorrow, you take your profits. It's telling you you're still in the sideways channel. Crocs had a nice breakout. This one you buy on positive trading, anticipating a 45-degree off of here. Anytime you see a doji gap up, that means that's extraordinary buying pressure coming in. You want to stay with that trend. And here's the typical. Came up, hit the 50, pulled back to the T line. I would buy this if it came back up through the 50. That would be you're telling you that this is now not acting as resistance. Your next target should be the 200-day moving average, which would be basically wave 1, J-hook, wave 3, getting up pretty close to that level. ARIA. Another one that needs to open positive and trade positive. You got kind of this big junky fry pan bottom, but if they open this positive, it's basically telling you they're not going to close it below the T line. ARWR has been sagging here for the last couple of days, but nothing yet that tells you there's any severe selling. If it came back down through the hanging man low, that's when you probably want to take profits, and then you just see what it does. You might be getting right back in it once it hits the T line and bounces back up again. XOMA, want to see this open positive tomorrow to stay in it. Otherwise, it's going to come back down and test the T line. FCX, stay long. There's your little double bottom, fry pan bottom. Stay long, but you're in the overbought area. You've seen a doji. You're right here at the resistance level, almost smack dab, right at the exact same level. I'd use the low of today as a stop. It shouldn't come back down through there. If it does, it's coming down to the T line. URA, there's your doji sandwich. This has a good prospect of going up to the 200. Essentially, you've got that flutter, double flutter kicker signal and a doji sandwich. You're right at the resistance level. If it opens positive, good strong possibility that's your next target. KTOS. Nice breakout of a fry pan bottom. This one you can be buying using the halfway point of this candle as your stop. MWW, you've got your shooting star. I'd use today's open as my stop. If it came down through there, that's a doji shooting star in the overbought area. If it came down through that level, it tells me the sellers have taken control and they're going to come back and test the T line. ICLD, I would probably now use today's open. It shouldn't come back down through that level. Now, the prospects are still pretty good that it's breaking out through this level with stochastics heading up, but you've still got some more upside. ADM, all you can do here is stay long as it stays above the T line. QCOM, another one where you just stay long as it stays above the T line. Now, if this opens positive tomorrow after a double doji, you could probably be a buyer because it's going to break out into new territory. United Technologies, stay long on this one as long as it doesn't close back below the T line. Let's see. GST, I think we did that one earlier. GST, we want to see that open positive immediately and trade positive tomorrow. WLT, this one you buy on a positive open. Your doji sandwich, telling you your double bottom is working and it's going to take you up much higher. DGI, this one needs to open positive and trade positive if you're in it long. If it opens lower tomorrow, you close out the position. That tells you the dark cloud and then the failure of the T line is in progress. That's when the profit taking started. The worst case scenario is you get out of the position. If it reverses, you can always buy it back. But if it stays below the T line, the probabilities are extremely strong. You're going to be heading down from this point. FXY, stay short. Oh, that's the to buy puts. Yes, to buy puts on this one. There's better situations. You're already well in the oversold area. They're not aggressively selling it. It's just a slow. I'd find something else to buy puts. Was that obviously not for Crocs, so Crocs you want to buy on positive trading tomorrow. CRR, this one you can get ready to buy. You can see the scoop pattern setting up, and you can see that it's kind of supporting here at the T line. If this started trading positive, I'd start looking at buying this one. Priceline is probably coming back to the 50. I say probably, at least to the 50. Notice the slow curve getting ready to slam it to the downside. Amazon, another one that if it opens weaker tomorrow after your hanging man, bearish engulfing, if it opens weaker and shows us that the 20 is not acting as support, it's going back down to the 50. But right now you're getting some very strong sell signals. Let's see. LGF, kicker type signal. Kind of a pullback, right? Remember, when they come up through a resistance level, they'll come back and act as support. To see if it's acts as support, you've got a kicker signal that's telling you they're taking this higher. I wouldn't be afraid to be buying this one tomorrow. Just be a little bit diligent once it gets to that level, the 50. BBY, nothing there that would get me excited one way or the other. Best, at best, if this opens weaker tomorrow, you want to be shorting it. ANF, another one that if this opens weaker tomorrow, you want to be shorting it. As you can see, they can't get back up above the moving averages right now. CCXI. Let's try to make this. Oh, you can stay long on this one. Left-right combo. Yeah, you can be buying this one using the T-line as your stop. YY. I wouldn't be long or short this one. This is still in a wedge. And Hog. Oops, that's Harbor. Let's see. S.H.O.G. Hog, boy. You're in such a slow uptrend. The only way I'd buy this is a positive open tomorrow and it breaks up, starts heading up toward the top of the trend channel and breaks out. Otherwise, you can see how slow and sluggish it's moved over the last few months. I'd be trading something else. And CCXI. Oh, we did that one. Let's see. ENPH. There's your slow curve. Your next target is up here, the 50 or the 200. This one I wouldn't be afraid to be buying on positive trading tomorrow. Vail. This one, if it does a doji sandwich tomorrow, notice a little trend kicker type signal. This one you can be buying, but you just obviously are going to be very diligent to make sure it gets through these moving averages. If it does, this downtrending channel is definitely breached. SXC didn't get started today. That's not the SXC that we're looking for. It opened higher and then backed off. Now, this one's still not out of the picture. If you got in it today, you should have been back out of it at the previous day's open. But it can still be bought if it opens positive tomorrow and comes back up through the open. That tells you that they're still using the T-line as support. SSNI. Stay long. It needs to break through this level, obviously. But we can see that it's moved sideways right back to the 50. And when it got here, notice all the doji hammer type signals. That tells you every time they took it down, they were taking it right back up again. IP, that's the skyline of Chicago. How's that? S.IPCI. This one's got a nice J-hook pattern setup. I don't know what the volume is, but this one, I would put a buy stop at 4. If it comes up through there, that tells me they're starting to take it right back up. Could get back up to the $6, $7 range. Obviously, the profit taking is over. Notice how they kind of bottomed out here and came back up through the T-line. Goog. All you can do here is stay long in the markets as long as Google stays above the T-line. And MEI, another one that needs to see positive trading tomorrow to be in it. If it opened lower, that tells me this has now lost its fizzle. But you do have a kicker signal. I would still suspect on positive trading, they'd be taking it back up again once all the profit taking was out of the way. All right. Let's see. Nally, still hang on to, or right now we've closed out some of that position in some of our longer-term accounts, only to take the loss for this year and then buy it back in 30 days because they just paid a dividend not too long ago. So we'll be back in before the next dividend. UNP, stay long as you don't see a sell signal on this one. And Goldman, S.GS. Goldman also, you stay long as you don't see a sell signal. And it stays above the T-line. But you do have a left-right combo, so if they bring it back down through the T-line up here, you take profits and wait for the next buy signal. PKD, this one needs to open positive and trade positive. If it opens lower, you definitely want to be out of that position. IMRS. There's your left-right combo. This one you can be buying with the anticipation of it moving up to the 200. Okay. All right. Thank you, Laurel. Yeah, I got to beat them at that, especially that 3-year-old. I got to beat her at match game. Okay, gold. Gold is still drifting. There's nothing here that'd make me want to buy gold. Same scenario with silver. They're still in downtrends, especially if this opens weaker tomorrow. You have a bearish flutter kicker. Tells me that they break this level, they're going to get back into this trend channel. Okay. Let's see. No, the time zone. Let's see. All right, let's call it a night. Everybody get back to their wassail and hot apple cider. And we'll see everybody in the chat rooms tomorrow.